Good morning, everyone. Welcome to the Foreign Correspondents Club of Japan here in Tokyo. I'm Anthony Rowley. I'm a former president of this club, and it's my pleasure to act as moderator to today's event, which is the latest in what we call our deep dive series, in which we ask panels of experts to take a look at subjects of current interest. And today's subject of current interest is innovation wars. We've called it Innovation Wars, Can Japan Stay Abreast? It's a slightly provocative title. I don't want to imply that Japan is a belligerent or an aggressor in this, but there is a possibility that Japan could become caught in the middle of other people's innovation wars. As we're seeing increasing competition, obviously, in technological innovation between the world's two leading economic powerhouses, the United States and China. And Japan needs to steer a policy course that optimizes its position as a kind of man in the middle, as it were. So we have three acknowledged experts to help us put these challenges into perspective. And I'm going to introduce them in the order that they'll be speaking today. So first, joining us from California, we have Richard Dasher, Dr. Richard Dasher, who has been a director of the U.S. Asia Technology Management Center at Stanford University since 1994. Dr. Dasher served concurrently as the executive director of the Center for Integrated Systems in Stanford School of Engineering from 1998 to 2015. His research and teaching focus on the flow of people, knowledge, and capital in innovation systems, on the impact of new technologies. On the impact of new technologies on industry value chains, and on open innovation management. He serves on the advisory boards for national universities and research institutions in Japan and also in Thailand. So welcome, Dr. Dasher. Secondly, joining us from somewhat nearer at hand, Yamanaka to be precise, here in Japan, where he's dutifully quarantining after a recent visit to the United States, we have Rick Dyck, who spent his career in the semiconductor industry, mostly in Japan. He's the owner and president of TGK-Japan, a company specializing in semiconductor testing. Rick was formerly vice president of Teradyne, a Boston-based manufacturer of semiconductor capital equipment, where he was responsible for Asia operations. He's also a director and investor in Japan Industrial Partners, a Japan-based private equity firm specializing in carve-outs of businesses from major Japanese corporations. He previously served on the board of Hitachi Chemical and of the Semiconductor Portal, which is jointly owned by Rick himself, and by Japan's main semiconductor equipment, materials, and device manufacturers. And thirdly, joining me on the platform today in person, we have Jesper Koll, who is a well-known face in this club, and I should say an active contributor to these deep dive events. Jesper worked from 1985 as a research fellow at the University of Tokyo and the University of Kyoto, before building his career in finance. He served as a managing director and chief economist for major U.S. investment banks J.P. Morgan, Japan, and Merrill Lynch Japan Securities. He's an expert director at Japan-based Monex Group, an investment committee member of the Japan Catalyst Fund, and he serves on the board of directors of OIST, which is the Okinawa Institute of Science and Technology. So, those are our panelists, and thank you all for coming today. So, Dr. Dasher, if you would lead us off, please, with your presentation. Thank you very much.
Thank you, Anthony, and thanks very much for the opportunity to participate in this panel discussion today. So I'd like to give a few remarks about the background of Japanese innovation and sort of the rise of innovation in Asia. Need to start with some basic definitions. First of all, innovation is often misunderstood. It's really responding to or anticipating some change, which could be a threat or an opportunity, by creating new value. So invention is creating something, but innovation is really creating new value. That means that value only exists when something is actually used, and value is often validated by a market. That means that really, when you're talking about innovation, you're not just talking about thinking of coming up with new ideas, you're thinking of all of the steps and activities that lead from the creation of a new idea to its real world deployment. Now, specifically, a new value can come from a new product or a new service. It can come from a new business model, or it can come from improving the efficiency of what you're doing. Efficiency often involves abandoning something that you used to do. And in that regard, a disruptive innovation is when an old business is disrupted as people abandon those projects or those products or services in favor of some new innovation. Innovation's always been in Japan. Innovation has always been an important part of the Japanese economy. Japan has seen its economy progress through all of the main steps of the World Economic Forum model of economic growth since World War II. So the role of innovation has really changed. Right in the post-war period, it was really about developing and delivering solutions for the basic needs of society. And then as an industrial base became established again, innovation really led to very high quality products being delivered at global scale. This was the era of globalization. And really, ever since about the Paris Accord, innovation has had a different role in Japan, partly because of the position of Japan and partly because of the changing world. Now, innovation is all about responding to or creating new world markets. And this means that a lot of the old parts that were famous in Japanese management are kind of looking a little bit long in the tooth. And people are saying that Japan needs more flexibility and needs more risk taking. And this leads us to the whole point about the innovation wars. What Japan has gone through in a very striking way is really something that all economies go through as they advance. And so as countries advance to developed status, innovation kind of becomes the obvious focus of competition, both on a national scale and on a corporate scale. One of the things that happens in this process is that anything that you can standardize, if you can have a standard way of doing manufacturing or a standard technology, that will naturally flow to a less expensive economy. Innovation, however, cannot be standardized. It always involves situation-specific opportunities, risk-taking, constraints, and so it kind of remains as the main focus of competitiveness for advanced economies. If you look at innovation and innovation competition in this way, the rise of innovation in China is a natural aspect of its economic development. What is the challenge for people outside China is that the state capitalism model in China involves what looks like a lot of different rules, including things like protectionism and sort of a lot of soft power from the Chinese government. The other thing that's happening with innovation that makes it very difficult and a very important base for competition is that we're in the middle of an industrial revolution. So the spread of digital data, the use of new IT tools like artificial intelligence and edge computing have drastically speeded up innovation on a worldwide scale. In the middle of this, you have the fuel for this fire being rapid growth economies in Asia, especially Southeast Asia these days. So how does Japan stand? Is Japan keeping up? Well, if you look at the adoption of cloud computing, no. Japan falls down into the laggards if you compare the growth in IT spending on public cloud services against the percentage of total IT spending that goes into public cloud services. Japan and Argentina and Indonesia don't show up nearly as well as other places, South Korea even, or China, which got a real interesting place in Gartner's challenge because of how rapidly it's developing. Another area, artificial intelligence. Is Japan keeping up? So the Japanese government has put together some really great science and technology funding programs. There's great artificial intelligence research going on in Japan, but there's not much corporate investment in artificial intelligence. A third area is what's happening in electronic commerce. So this really illustrates the problem of digital transformation in Japan. People are adopting digital technologies. Now, 10% of all of retail sales in Japan are by e-commerce, but the preferred payment method in Japan is still very traditional, credit card. Instead, in other countries, things like digital wallets are much further along. You can see this in some other indicators. The ACCJ and McKinsey together put together this digital scorecard for Japan, and Japan does not show up well in digital competitiveness. 5% of the population is taking advantage of telemedicine in Japan, whereas you've got 30% in Saudi Arabia. Mobile banking hasn't penetrated very much in Japan compared to China. The percentage of citizens using digital government applications is pretty low, especially compared to someplace like Estonia. I think that this basically, for my comments, I'm looking forward to the discussion. Why is Japan lagging? I think that the issue is that you have a lot of big organizations that are taking an additive approach. They're trying to add innovation on top of what was the old model of economic growth, efficiency-driven economic growth. The efficiency-driven growth required tight controls. How do you control a global company? This was needed, and it's very hard to get buy-in for new digital business ideas from senior managers who are a little bit too comfortable in their positions. We're seeing some high-profile examples of people getting fired from jobs, like the chairman of Toshiba. But basically, things are too comfortable at the higher level. The entrepreneurship ecosystem is likewise stuck in an old model of economic growth. It's really not generating sufficient upside potential to really attract many gifted people to startups. Basically, what I mean is entrepreneurs need to think bigger, and the investors need to push them to become bigger. I think a lot of the kind of traditional focus on the domestic Japanese market is not a sufficient upside potential for a company in the IT space. Few slides on this. So this is pretty well known. Japan has a relatively low rate of entrepreneurship in the economy. About 5.5% of working age adults are engaged in early stage entrepreneurship. What's kind of more interesting in this same survey is that they took a look at the attitudes of people who are not actively involved in early stage entrepreneurship. In the US, the biggest change that you notice in this graph is how many people now see good opportunities for entrepreneurs. People in the US have a strong self-confidence in their ability to be an entrepreneur. They think they have the capabilities. The fear of failure in the US is a little on the low side, but not too unusual. 35% of people are not starting a company because they are afraid of failing. The people who intend to start a company within the next 3 years is a little bit higher than the actual rate of entrepreneurship, which indicates a relatively stable system. If you compare that system to Japan, of course, on this graph, it looks like a high fear of failure, but if you were to compare China and Thailand, you would find 40 to 50% of the people are avoiding starting a new company because of fear of failure in those countries too. The other thing that I think you should be careful of is that in Japan, people tend to be humble. So if someone says they don't have the ability to be an entrepreneur, maybe they're being culturally humble. But what is absolutely undeniable is that people in Japan do not see good opportunities for entrepreneurs, and there has been no change in that percentage of the population who see good opportunities for entrepreneurs over the last 18 or 19 years. So to conclude my comments, I think that we need to recognize that Japan has some great strengths, both on the creation side of innovation and on the business deployment side of innovation. It's got the strongest base of advanced science and technology in Asia. You're seeing a steady generation of Nobels. I was happy to find out that Jesper is involved with Okinawa Institute of Science and Technology. It's an amazing institution. There's continued government support for R&D, a lot of system improvements. Japan has a very robust early adopter consumer market. It's also got long-lasting, very strong business ties to Southeast Asia. And so it could be a real player broader than Japan in these kinds of new innovation areas. In order to take advantage of that, it has to embrace disruption. It has to get used to the fact that a lot of the old ways of doing things in Japan just don't keep up anymore. Digital transformation is really 10% digital technology and 90% transformation, changing what you used to have in order to adopt something new. So the other thing is Japan really needs to aim to be more globally engaged. In this regard, I do think Silicon Valley has some good lessons. A Silicon Valley company goes and pitches to investors here. If you cannot demonstrate some sort of a global domination strategy, you're probably not going to get money. So at least people are thinking globally early here. The other thing is Japan should aim to attract and use the best human resources from worldwide. That's one of the things about OIST down in Okinawa that's very different from most Japanese universities. The majority of people are not Japanese. So I think that this fits the Silicon Valley model. 64% of the working age population in Silicon Valley was born in a foreign country. So I think Japan has some big challenges ahead of it. There's absolutely nothing in Japanese system or culture that would prevent it from being a very strong innovator and a strong competitor in these innovation wars as we go forward. Those are my comments to start off.
Thank you very much. You're actually somewhat ahead of time, but very interesting, quite provocative. Okay, let's go straight on to you, Rick, if we may. Your presentation, please.
Okay, let me get it up here. Is it showing?
Yes. We can see it, yes.
Okay, good. It's amazing. I'm up at Yamanaka-go, as Anthony said, in my kakuri 14 days. We built this cabin up here in 1982, and we didn't even have a phone line. And then, so if I had to make a call, especially an overseas call, I had to go to the other side of the lake to an NTT office. Then we got a phone line. Now we actually got fiber to the home up here before my friends in Santa Clara, near the headquarters of Intel, got fibers to their home in Santa Clara. So actually Japan was ahead in fiber to the home. And even in Lake Yamanaka, I'm just hoping that my line works and can hold up. First of all, Anthony mentioned in the beginning about Japan being caught in between the United States and China. I'm a fan of Ishibashi Tanzan, and if anybody has.
Rick, I'm sorry, could you speak a little closer to the microphone, please? I can't get you all that clearly. Sorry.
Okay. I'm speaking into my computer. Can you hear me now?
I think that's better, yes.
Okay.
Yes, better.
I think there's an argument that Japan is perfectly situated between the United States and China and can take advantage of both. I'm a fan of Ishibashi Tanzan, and if anybody hasn't discovered Ishibashi, he was the editor for years of the Toyo Keizai. Then he became finance minister after the war, became MITI minister, and then became prime minister for a short time. Ishibashi Tanzan always said that Japan should not, first of all, be an imperialistic country. Japan should take advantage of its ability to invest in Asia as well as the United States.
Mm.
Of course, that didn't lay sway before the war, but after the war, it is. I'll make a point later, but there is an argument that Japan has the largest cumulative assets overseas, that is investments cumulative by Japanese companies overseas, than any country in the world.
Mm.
And Japan's investments in Southeast Asia, for example, or South Asia, exceed what China is doing in the BRI. So there's a lot of talk about BRI, but actually it's Japan that is the heaviest investor in Indonesia, Vietnam, Thailand, and so forth. That's something that we often forget about. So Japan has the ability to work in both. And during the Trump administration, I think that Abe did a very good job of taking to Trump his special putters and playing golf with Trump. Well, and being on committees with the United States on how Japan can contribute to 5G, while at the same time, Japan is heavily invested in China and sells to Huawei and other companies. Japan can be both. What is innovation for is one thing we can ask. And I think the first goal of innovation should be to produce products or services which customers value, preferably products which have good gross margins and high barriers to entry. It sounds simple, but that is one goal. Another goal, if you go down to the bottom, was R.R. Wilson, who was one of my professors in graduate school, and who was also on the Manhattan Project, and who felt a great deal of remorse for what he did as a theoretical and experimental physicist on the Manhattan Project, reminded us that we also have to think about what about the other aspect of technological development. R.R. Wilson went on to head the largest particle accelerator that the United States invested in the 1980s. It was hundreds of millions of dollars, and he had to go before the Senate to justify the investment. And the senators asked him, will this particle accelerator make it easier for us to defend our country? And Wilson said, probably not, but it will make our country worth defending. And when I came to Japan early on in the 70s to do my PhD on technological development in Japan, one thing I noticed was that Japanese professors, like R.R. Wilson, were very, very reluctant to participate in either government or corporate research because of their experience during World War II. And in some ways, that continues in Japan. One of the weaknesses of the Japanese system, I think, is the gulf between universities and both the government and corporate research. And that makes a difference on the next page. The next page is basically how Japanese R&D is structured and where it is spent. If we look at the upper left-hand side, Japan very much is among the top countries, as we would expect, in spending money on R&D. This is R&D as a percentage of GDP. And the red line here is Japan. As a percent of GDP, Japan is ahead of the United States. But of course, because the GDP is smaller, in absolute terms, it would be below. But this is Japan. This is Germany. This is the United States. And China is coming up quickly. So Japan is among the top countries in the money they put into R&D. If we look at government-funded R&D, Japan is minuscule. It hardly even shows on the map. This is the United States government, and this is in absolute terms in trillions of yen. And the United States is up here. But if we look here, this is China. China government-funded R&D is now, in absolute terms, it exceeds the United States and is growing quickly. What is that R&D used for? If we go to military versus civilian use over here, Japan's military use of its government-funded R&D is minuscule. Japan spends almost nothing on military development compared to the rest of the world. The United States is 50%. At this point, the Chinese numbers aren't available, but I would suspect that Chinese government R&D for military use is 50% or more, which means in absolute terms, this is for development. This is not spending on weapon systems. China is probably spending more on military-related R&D than the United States in absolute terms. This is comparing the United States and Japan on where R&D is funded and where it is used. And this has been true since the 1970s. In Japan, as Richard said in his presentation, the majority of R&D funding comes from companies, 78%, and it's used in companies. Whereas in the United States, about 62% comes from companies, but companies also get funded, especially for military R&D from the government, so they use about 71% of the total. Japan government R&D is 15%, and most of that actually goes to universities, and that's for basic research. So the thing is, most R&D in Japan comes from companies, and how effective is this? As Anthony said, I was on the board of Hitachi Chemicals for 6 years. Hitachi Chemicals is a huge, multi-billion-dollar company. Once a year, we would have a seminar, an all-day seminar, where we would rent a huge space in Tokyo, and we would have all of the engineering groups around Hitachi Chemicals come and give poster presentations on what they were doing. And then we would have the really key presentations being given in a large auditorium to the rest of the company. And we would have in total maybe 200 engineering projects. And it was fascinating. I would go from presentation to presentation to presentation to look what was going on in the company. The thing that struck me was very little of that. Maybe out of 200 presentations, 5 would eventually make it into products and make it to the market and make it to customers. And this was a problem. And it was a problem we recognized. One of the things that we're doing in our private equity fund now, Japan Industrial Partners, we're working especially with NEC in carving out these engineering groups and making them into independent companies and see if we can make them into products that will, and into companies. So it's sort of, I'm on the board of one company that has been working on a very interesting nanotechnology for 20 years with an engineering group that's very bright. And now we're going to try to make this into, it's like taking a 20-year startup and then trying to take it to market. And I think there's an enormous amount of that in Japanese companies. And one of the issues is how to get that into the product, into the market. I'll skip this page because I'll only talk about it briefly. But this is from the Bank of Japan, and it shows repatriated earnings from Japanese companies that are invested overseas. There's no exact figure of what Japan's cumulative investment is of all Japanese companies overseas. It's a very hard figure to come by. The nearest analog you could get is to look at how much is repatriated from Japanese investments overseas. First of all, you'll see that the number is increasingly greatly after 2009. Japanese overseas investments, this means, increased enormously after 2009. That's after the Lehman shock. And one thing we have to remember is after the Lehman shock, for some period of time, the exchange rate was about at 80 yen. Overseas investments to Japanese companies, which were flush with cash, were cheap. And the growth of Japanese companies during this period, what we think of as another lost decade in Japan, the growth was really overseas. And that is why there's an argument that the cumulative, if you think of Japan on a consolidated basis, that Japan is the world's largest cumulative investor overseas. And if you do the arithmetic, this would add about $2 trillion a year to the Japanese GDP. Of course, these numbers don't get into the Japanese GDP, they get into the GDP of Indonesia, China, the United States, the host country. Okay. Let me talk for a minute about the role that Japan played and the role that the United States played in the development of the semiconductor industry. I'm going to go over history, and it's a history that I lived, and pardon me if this sounds like old war stories, but I think the development of the semiconductor industry is an interesting case study in the differences in the ecosystem between the United States and Japan. As many of you know, what drives the semiconductor industry is something called Moore's Law. This is named after Gordon Moore, who was one of the founders of Intel. It's not a law at all. It's not like a law of physics. What Gordon Moore said in a paper that he published in 1965 is that the semiconductor industry had become so large, with so many smart people and so much investment, that every year, the number of transistors on an integrated circuit will double. So you get double, and then double, and then double. You get an exponential curve. It was actually astounding. And the results have been amazing. What you get in this, if you take the price of a semiconductor in the beginning of the industry in the early 1950s, the price of a transistor was about $10. This curve goes up to 2010, but that transistor that was $10 in the early part of the industry is now, the price is 0.1 nanodollar. Or 1 to the minus 10th dollar, or 10億分の1 dollar. This has been the result of the exponential curve of Moore's law. At each point on the curve, at each generation of the semiconductor industry, you've had certain technological breakthroughs that you had to make. It's basically, semiconductors are made by a photolithographic process. So you have the limits of light waves. You have the limits of power, that is electric power. You have the limits of heat. Each place across on the curve, you've had to break through enormous limits. But you can also make a lot of money. And so there's an incentive for very smart people to come into the industry, to join the game. If they make these hurdles, then you can make a lot of money. Actually, this curve would not have taken place if it had not have been for the fact that both the United States and Japan was involved. It took both countries up until the late 80s to drive this curve, but with very different approaches. I just like to make this quote from Schumpeter here. This is from 1942. But the capitalist achievement does not typically consist in providing more silk stockings for queens. This is a misogynist statement, I suppose, but in bringing them within the reach of factory girls in return for steadily decreasing amounts of efforts. And certainly no place has that been more true than the semiconductor industry. All of us today in our smartphones, our iPads or whatever, carry around with us thousands of transistors. In the United States, the way the curve was driven is by this, which is the Silicon Valley genealogy of companies that participated in the semiconductor industries in the 70s and 80s. It's an eye chart. The only thing is, there were hundreds of companies. Sometimes every year you'd have 20 new startups coming into the business. And it was driving through these small companies, these entrepreneurial companies, searching for catching the golden ring that drove the industry. In the 80s, Andy Grove, who became the CEO of Intel, said that one of the weaknesses of this industry for the United States is that you can't create a company in the United States that is of critical mass. We cannot create a company in the United States that can compete with NEC, Hitachi, Mitsubishi, or Fujitsu. We are doomed. We're not going to be able to compete with the Japanese. Because every time a company gets going and it goes public and its stock price goes up, the good engineers take their stock options, go off, and they go into another startup. So,
good point. This
is one of the strengths, and according to Andy Grove in the 80s, it was one of the weaknesses of the business. In Japan, on the other hand, you had NEC, Oki, Fujitsu, and you had Sony. You had 5 or 6 large companies, conglomerates, who were driving the industry. This is Ibuka Masaru. When I did my PhD thesis, Ibuka sort of took me under his wing and tried to tell me how Japanese make semiconductors. Sony was making semiconductors because it wanted to make pocket radios, and it wanted to eventually make the Walkman. It wanted to make consumer products. In going to Ibuka, when I met him, he was already the chairman emeritus of Sony, but he still went to the factory every day, and he had an office out in Atsugi, which was the main area of development of Sony semiconductor. And on his desk, he would have boxes of integrated circuits. The integrated circuits in the boxes were all bad devices. They were all rejects from Sony's production line. And that's one of the things about semiconductors. There's a yield. There's a yield of good devices and bad devices which come out of the production process. And Ibuka would call these his jewels. Why would he call his defective devices his jewels? Because if he could understand why the production process was making these defective devices, he could improve the yields. So it wasn't how Sony could make good semiconductors. It was how Sony could not make bad semiconductors. It's now obvious in the industry, but this is something which all of us learned from Japan. On the other side here, this is Iwama Kazuo, who was the 4th president of Sony. Iwama, when he was a young engineer, Sony paid $25,000 to import the first transistor technology from Western Electric, from Bell Labs. And Iwama was assigned to go to Allentown, Pennsylvania, which was a backwater in the 1950s. And by the way, is still a backwater. To go to Allentown, Pennsylvania, and to transfer the technology. The rule was that the companies that paid the $25,000 for the license fee, they could go into the factory as much as they wanted. They could take no photographs and they could take no notes, but they could go into the factory for however many days they wanted to go. Iwama went to Allentown. He stayed in a shabby motel. Sony didn't have that much money. He went to the factory every day for 3 months. He would come back to the shabby hotel. He would write up from memory his notes from that day. He would put them in a airmail envelope and he would send them back to Tokyo. He did this day after day after day after day. And in Sony's museum, you have what is called the Iwoman Notes. It's binders that cover a whole bookshelf of what he sent back. This was the drive that people like Iwama at Sony had to adopt the technology. The other thing that Iwama was also the father of the image sensor device. All of us these days have image sensors on our Apple iPhones. All of the image sensors on the Apple iPhones are still from Sony. It was a very difficult device. It was a device theoretically which IBM knew could be made, RCA knew could be made, General Electric knew could be made, Kodak knew could be made, but nobody was able to make it at commercial volumes. Iwama went to the Sony Central Labs where they were working on image sensors, and he said, if we keep these in R&D, they will stay in R&D for decades. We'll never be able to make it in commercial. He took it out of there. He took it to the factory, and he worked, and Sony became the first company of all of the companies working on it. Sony became the first company to make image sensors, and still Sony is by far the largest manufacturer of image sensor devices. But these are just examples of the kind of dedication which they brought to the process. Nonetheless, the history of the semiconductor device industry is a history of the rise and the demise of Japan. And in the group that I hang out with in Japan, which is mainly semiconductor people, this is always the topic of conversation. Where did we go wrong? We were so strong. What happened? And you know, no people are better at sort of reflecting on their mistakes than the Japanese. And so this is a constant topic. Here we have the beginning of the industry. The US at the beginning was obviously the leader. They were the pioneer. Japan was coming up from behind. In about 1986, you have the crossover point where Japan, these are Japanese companies, pulled ahead of the US companies. In 1986, the leaders in semiconductor, the top 10 semiconductor manufacturers, 6 of them were Japanese: NEC, Toshiba, Hitachi, Fujitsu, Panasonic, and Mitsubishi. The leaders in the United States, the leaders overseas were Motorola, TI, National, and Philips in Holland. NEC was the largest semiconductor manufacturer in the world. In 1990, there were still six Japanese companies, still 4 non-Japanese companies. Intel pulled ahead of NEC, but nonetheless, in 1990, Japan was coming down a little bit. The United States was coming up, but still Japan was dominating. Here you have the crossover point where Japan goes down. And if I had taken this into the future, you would see Korea, here it's logged in with Asia Pacific, you would see Korea coming way up, which is mainly Samsung. And you would also see Taiwan coming up, which is TSMC. And you would then begin seeing China coming up. In 2020, there's only one Japanese company left in the top 10. It's a company you probably haven't heard of called Kioxia, but there's a lesson here. Kioxia is the NAND flash business of Toshiba. One thing to think about is that all of the Japanese companies who were driving the business from the beginning here were conglomerates. They were all conglomerates, and the semiconductor business was one division of a larger company. In Hitachi and Mitsubishi, it was a larger division of a company that was mainly dominated by heavy power.
Rick, sorry to interrupt you, but if you could draw to a close fairly soon, because we are running up a little bit against time. Sorry.
Okay. Let me hurry. A couple of things. All of the Japanese businesses were conglomerates. The semiconductor was a division. In the case of Siemens and the US companies, they spun off their semiconductor divisions and made them into private businesses. The Japanese didn't do that. Kioxia was spun out of Toshiba when Toshiba got into severe problem. The one part of Toshiba that had high value was their semiconductor business. They spun it off when they got into real trouble. I think there's a lesson there. A couple of other things, two things that I think that are important, and then actually I'll wind it up and not get to the final slides. The United States, when this happened in this period, had a real sense of crisis. And US companies joined together in something that US companies almost never do. They formed a consortium to see if they could have a pre-competitive technological development to compete with the Japanese. The consortium was called Sematech. Everybody was skeptical because the United States, people in the US don't cooperate with each other very well. Robert Noyce, who was one of the founders of Intel, said, I will head the consortium. I will get the best engineers in the United States, and we will really make a difference. And by the way, we will not allow any Japanese to visit us, and we will not allow, we will just learn how to compete with the Japanese. It was very successful and helped enormously in manufacturing technology. The Japanese, when they started going down, also formed consortia. And the surprise to me of somebody who's been in Japan for a long time, the Japanese consortia didn't work. For whatever reason, it's very difficult to get people from NEC, Hitachi, and Toshiba to cooperate with each other. They tended to send the people to the consortia who were kind of the deselected people in the home company. And they did not have an impact. And this is recognized in Japan. How did the United States form these effective consortia, which really helped to solve to ameliorate the crisis in the United States? And Japan was not able to do it. I'll stop there because we're short on time.
Thank you very much. Some fascinating material. Jesper, please. One of the points that Richard Dasher made, which intrigued me, he said that Japanese companies need to think bigger and investors need to push companies into thinking bigger. I don't know if that's something you want to comment on, but please,
No, I mean, first of all, I mean, Dr. Dasher and Rick, I mean, absolutely fantastic, and I love the overview there. I must say, I always get a little bit twitchy when people talk about the demise of Japan's semiconductor industry. And, you know, because, I mean, that's one industry. If you are in other industries, Japan absolutely thrives. My favorite example, of course, is Michelin stars. As you know, Japan has 686 Michelin stars. The great United States of America, that innovation powerhouse, only has 171. I know where I'd rather go to eat. Anyway, and obviously, look, in terms of, is Japan innovative? Is it not innovative? There's a lot of glib. We talk about the high performers. Yes, I'm fully aware that Japan did not invent Facebook and Google and Amazon. But when you look at the overall broad spectrum of industrial and competitive performance, Japan is perfectly fine. And I loved the fact, Rick, that you pointed out that Japan continues to be the world's largest creditor country. This is a remarkable feat. How can you not be innovative? How can you not be competitive when at the same time you continue to crank out current account surpluses year in, year out of between 3 and 4% of GDP? So you must be doing something right. And if you're in the boring space of construction machinery, for example, I think it's very clear that Komatsu is the undisputed leader in that sort of universe. If you talk about the universe of robotics, there's no question that you've got Fanuc as the undisputed leader. Fanuc, by the way, on my numbers, is the best company in the world. They have average operating profits for a manufacturing company, average operating profits of 55%. In the worst of the worst, during the Lehman shock global financial crisis, that profit margin went down to 21%. I mean, show me a company that can do that sort of thing. Innovation, and I'm sorry, I don't mean to be a little bit glib, but I was riding the subway here in Tokyo, the other night, and I saw that there's now special face creams that are coming out, for the Japanese women, because when you wear a face mask, of course, you need a different form of hydration. So it's very, very interesting, and I do love my favorite statistics on Japan's innovation power. Do you know that in Japan, every 10 days, a new soft drink is being launched? So, there's a lot of, innovation going on. Now, very true, as was pointed out, obviously there are some industries, like the semiconductor industry, where Japan did lose out here. But, I think that, one shouldn't rush to conclusions, and the overall economic performance of Japan, in terms of cranking out these trade and current account surpluses, again, must show, or certainly do show that Japan is doing something very, very well. Now, the problem is that indeed, the speed and the transition from innovation to commercialization, that is something where Japan has a big problem. And as Dr. Dasher pointed out, that's actually the part of the innovation set. You can innovate and be creative, but at the end of the day, if you can't prove that concept, that innovation in the market, right, then there's really very little point on doing that. And here there's a great example of untapped potential MRIs. Do you know that Japan has 10 times more MRIs per capita than the United States of America? And the reason, of course, is very simple. In Japan, you can actually afford to have an MRI, while in the United States, you can't. But this data from these 10 times more per capita MRIs in Japan is not being used, right, for medical research. And you can imagine if you could get that sort of data with a little bit of AI, and some clever algorithms, you could be very, very innovative, very, very, creative, very, very quickly. And somehow, as Dyck pointed out, with the problems Japan had in creating a national champion in the semiconductor industries, Japan is just very, very fragmented, right? And quite frankly, Team Japan doesn't really talk to each other. In fact, they're so fiercely competitive. And by the way, that's, something that people always forget. How, and this is one of the reasons for why it is very difficult to be an innovator or to be an entrepreneur here in Japan. It is deviously difficult not because of rules and regulations, not because of taxation, but because the Japanese market is the most competitive market in the world. Let me show you the numbers. You find, if you look at all the different industries and services that METI categorizes, I think there's 3,800 different industries, from like steel pipes all the way down to barber shops, right? Everything in between. You find that in Japan, on average, in all those industries, the top 4 companies control about 12% of revenues. In the United States, and it's not exactly like for like because the industrial clusters in the United States are categorized differently, but in the United States, the top 4 players in each industry on average now control about 32% of revenue. So America is, from an economic perspective, much more of an oligopolistic, if not monopolistic type of business model, rather than the fiercely competitive model that we actually have here in Japan. So I want to make the first point: getting from innovation into commercialization, that's of course the golden goose. That's where economic growth is going to come from. Why is it so fiercely difficult here in Japan? Is because actually the industrial structure is overly competitive, right? And as a result of that, to actually make an inroad. And it's all very nice and well to say you're going to be disruptive because you've got some sort of technology that is better. Well, that works very well if you are in a green field, like in the People's Republic of China, because famously you don't have to lay the copper cables. You actually can go directly wireless, right? In Japan, it's very different. We've got the world's best infrastructure, and that infrastructure, let's disrupt it. It's like, no. There is a utility, there is a yield that comes from that, and as a result of that, phasing in new technologies, right, is something that I think is very, very important. And to this, I'd like to make a little anecdote, at the risk of sort of being too anecdotal. Anthony always hates it when I do this, but I was on the stage, I forget, 8-9 years ago with Elon Musk at the Keidanren. And, Mr. Musk, went off about self-driving cars and self-driving cars this and that and that and this. And so I got very itchy. And I said, Mr. Musk, you are visiting Tokyo. We already have a self-driving car. It's called a subway, right? And he exploded and got very angry, since I'm obviously an idiot, and ranted on a little bit more. And so then I said, well, I'm terribly sorry. I am just an economist. From an economist perspective, the only difference between a self-driving car and a subway is the subway, the equity is owned by the people. With self-driving cars, there's 4 guys who get filthy rich. Anyway, that was the only time I ever got a standing ovation from the Keidanren. I'm not a socialist, far from it. I am, an investor. One other sort of little thing that I think is worthwhile to point out, that actually, if you look at the, venture business here in Japan, I actually think that, the room for innovation, in the sense that Dr. Dasher laid it out, really from the innovative process all the way through the commercialization, I actually think that Japan stands at the brink of a new golden age. Because I think now a couple of things have happened. And the first one, to come to Dick's point also, is, there is a big generational change that is now happening. And that generational change is happening, at Hitachi, it's happening at the Japanese banks, et cetera, and the realization that business as usual is not the way to go, right, I think is starting to come through. And you've just, over the last 2 years, you've seen basically all of the industrial conglomerates here in Japan beginning to introduce intrapreneurship programs, right, where the engineers are allowed 15-20% of their time to just futz around and be creative, have every quarter a competition, and then that competition, getting fostered even further. So I think entrepreneurship is something that we are going to be seeing and hearing much more of. The other thing is, that the angel investment and venture capital scene here in Japan is actually beginning to move very, very nicely. So, for example, last year, you found in 2020, you found that Japan-based venture capital firms invested in 1,892 corporations, right? Starting them up. Now, that's very small. In the US, it's 12,350, right? But, 5 years ago, it was less than 500. So, the scene is actually starting to develop. As many of you are familiar, there have been some changes in the tax code. And most importantly, you actually find that the Japanese institutional investors, the insurance companies, and some of the pension managers are actually, not are setting up, they have set up, venture capital, private equity, compartments, and are actually moving into that space quite nicely. Another little fun fact that is actually quite interesting is that, in the United States last year, you had 103 IPOs that were where venture capital was involved. What was it in Japan? It was 50. Now, given that America is 3.5 times bigger than the United States, that's actually a very good showing on the part of Japan. And when you look at the pipeline of what is coming to the market, it's quite interesting. And by the way, in my day job, I just have to make money by investing. And it's a good investment if you buy a Japanese IPO and you sell an American IPO, and you do that all the time, right? You hold these instruments for 1 year. You typically, on an average year, outperform, by about your performance is actually up by between 28 and 30%. So it's quite interesting. There's a lot of hype in the United States, right, about IPOs. But when you look at the actual performance, Japan has absolutely nothing to hide, right, in terms of the money performance. The scale is obviously different in the United States. There's no question about that, right? But in terms of the actual investment return, Japan is actually doing a very, very good job. One final point. Why am I optimistic, and I dare say that Japan stands at the brink of a golden age for entrepreneurs, actually at a golden age, for startups. And the key reason is that actually now labor is available. Because you do actually have, and this is ironically, it's being turbocharged, it's being accelerated by the COVID crisis, right? Where, a lot of people in their 30s and 40s are actually realizing that, well, just being a salary man, right, actually puts me at risk, because some random person is going to assign me somewhere, and I'm not going to, going to maximize, what I want to get out, of my life. So it's quite interesting. I sit on the board of several startup companies. The amount of CVs that we've been receiving from top companies, right? Great quality of people over the last 15 months has actually increased very, very dramatically. And so I think we can all agree that the real issue that you need is you need to see a market opportunity, of course, but you also need to have the human capital, right? You need to have the talent, the people to actually grow and scale your business. The fact that the labor mobility is actually improving, that's very, very important. And then the second reason is that I think, we are now at a very, very interesting inflection point where for the first time since the end of the bubble economy, we actually have a new generation of entrepreneurs who've made a lot of money. There is a group of people who did make money, over the last 30 years in various types of businesses. And, these people are now mentoring as well as being angel investors, right, to Japanese entrepreneurs. Because obviously, during the 1990s, during the collapse of the bubble, if you basically are stuck in deflation and you're fighting fires all the time, wow, you really need to not just be an average risk taker, you need to be an extraordinary risk taker in order to start a new venture. Now things are calm and are stable. there's a new group of Ibuki sensei. There's a new group of people, who did set up successful companies throughout the 1990s, early noughts, who are now reinvesting in people, in mentorship. And that's something that I think makes me very, very hopeful, that indeed the transition from innovation into commercialization, that, Japan over the next, 3 to 5 years is going to show its flag, as it were, on the international scene. That's it from me. Thank you.
Thank you very much. Okay. First, let me ask, excuse me, whether we have any questions from people in the room here today. Yes. One question I would quickly like to put to the panel, to bring this back into focus, as it were, is, does it matter? And why does it matter? What I mean by that is a country which is innovative, presumably produces good exports. It doesn't have to import so much from other countries. The well-being of its citizens are served by being an innovative country. So listening to Dr. Dasher, who pointed out that Japan is behind in certain respects in innovation, and Rick Dyck made a very good point, for instance, the military spending or defense spending spin-offs here from innovation are huge. So from each of the panelists, starting with you, Richard Dasher, please first, is why does it matter? I mean, look, projecting forward, if Japan is going to be behind in innovation, why is that going to be a disadvantage? And conversely, if it's going to be ahead in innovation, why is that going to be an advantage?
Okay, thank you very much, Anthony. What justifies high wages? Up to a point, the quality of what you make will justify high wages. The ability to deliver something on time and on scale becomes a necessary condition for all business. But beyond that, the really high value is where you catch the heartstrings of consumers or your customers, you make them overjoyed. Eventually, innovation is the only way to maintain a high standard of living in an economy, because if you can do something well, if you can learn something and imitate it and do it well, it will go to a cheaper economy. So I think that it's absolutely essential. Innovation has got to be the core of Japanese strength moving forward.
Okay, Rick. Briefly.
I would say Japan is a leader in innovation, as Jesper said. I mean, if you take Japan and Korea, for example, Korea is a very innovative country. Korea, Samsung is ahead in semiconductors of any Japanese company, obviously. And yet, Japan has a positive balance of trade with Korea and has had consistently a positive balance of trade. In Korea, to be a successful company, you have to learn how to work with the supply chain, which is largely Japanese. Materials, manufacturing equipment. So Japan is innovative. I think it's a Ricardo universe. There are comparative advantages which Japan has, and comparative advantages which other companies. But also Japan has to import in order to export because it has more natural resources.
Okay.
I think it matters because, of the aging structure that Japan has, in the sense of that you need to generate a return of 8% or more in order to keep the pension system funded. The other point that Dr. Dasher made obviously is very, very important. At the end of the day, you need higher incomes. At the current rate, there's a significant risk that, we're not just going to have the lost generation, but that actually the children of the lost generation are also going to see nothing but stagnating wages and stagnating incomes. And, in order to get higher wages, you need higher productivity, you need higher profitability. And that's, the key issue, right? You need the rate of return in order to fund your aging society. And at the end of the day, look, I mean, the best way I mean, if you want to have a sound pension system, the best way is to have a sound pension system is to make sure that your children earn twice as much as you did.
Good point. Sato-san, do you have questions? No. Someone has raised hands.
There's a guy there.
Oh, you have a question first. All right, there's a question in the room first, then we'll come to this. Sorry, please. Please give your name and your affiliation, please.
Hello, my name is Ikubo, and I have two questions.
All right.
One is it okay, Neville?
Yes, if you can pick the microphone.
The Japanese industry has been very successful because of the Japan model, which was identified by Jim Beglan then, the lifelong employment and seniority system, and possibly a company union. Now, to me, these strengths used to be the strengths, is not a strength anymore. And my question is Japan continue to cherish these three items as a typical Japanese companies, or we have to change that? The second question I have is, all of the speakers touched on efficiency. And somebody said Japanese take little risks. And I wonder what's behind that. Efficiency of operating, the efficiency of making solving problems, making decisions. Those are very slow. And I wonder why, how can we improve that? I welcome your opinion. Thank you very much.
Right. Now, who's going to take? So the first question concerned the Japanese companies were typically dependent on seniority systems. So in the future, disruptive.
Can I? I'll take that.
Okay. All right, Richard, you take it.
So I think that the Japan model was extremely effective
So.
during a particular stage of Japan's growth. I think that what has happened is the one thing that is always happening in the world is change. And so any system, the more kind of rigid it becomes, the less it does for you, right? So I frankly think that we're going to see changes. We are seeing changes in Japan. Jesper, I agree with you. I'm seeing young people who are much more willing to work in startup companies than they used to be. And this is really just in the last 2 or 3 years. I think that the risk-taking, there's a natural kind of risk-taking that a large corporation does, and it's different from the risk-taking that a startup company can do. This was dealt with way back in the works by Professor Clayton Christensen, The Innovator's Dilemma. And really, a large company is going to support its existing business and try to add a little bit to that to continue growth. In contrast, a startup company has no existing business to support. It can gamble everything on something new. The missing piece of the puzzle in Japan is how these startup companies can be integrated into the industrial landscape. Jesper, you mentioned that, IPOs in the US, there was 103, I think you said, and 50 something in Japan. That's true, but in terms of the total number of exits, there are more IPOs than there are exits by acquisition.
Yep.
Whereas venture capital backed companies in the US, 9 times as many companies exit by being acquired by a big company. This is how the giants in Silicon Valley manage to keep their kind of entrepreneurial nature, and how they hedge in an uncertain direction of industry. Apple, buys companies every year, even though they're not really well known as a friendly, open company. And I think that really the risk-taking that you need in an innovation-based economy requires both a good, strong, large industry sector and a robust startup company sector.
Yeah.
And they have to interact with each other to really generate for the national economy. I do agree. Japan's at an inflection point. It could go really well.
Yeah, that's a very interesting structural point. Jesper, you want to make
This is the key. It's a key question that you ask because it goes into Shanai Bunka, right? Into the corporate culture, right? And you have lots of romantic visions of that, but I very much agree with what Dr. Dasher just says, right? That innovation from outside, having the radar at the large corporation, and every day listening to literally hundreds, right, of business proposals, right? And then picking a company, whether it's in a startup stage or whether it's already in a growth stage, picking that company and integrating it into your corporate culture. This is where, unfortunately, with very few exceptions, like Nippon Densan, for example, right? Japanese corporate culture has become so rigid and self-obsessed, right? That actually buying a mid-sized startup, right? And integrating that into the corporation has become, for most of the companies, right, a very, very big problem. And that, needs to be solved. And I'm hopeful that, the fact that, the Japanese corporations slowly but surely are beginning to expand, more overseas again, right? That could start to come to fruition. The final point that you mentioned on risk, I totally disagree with you. And look, of course, Japanese companies take huge risk. If I'm an entrepreneur, if I start a company, right, I am liable with my personal assets, right? Basically, as you know very well. The second point, just for 30 seconds, just to have some fun. I mean, Japan's leading company is just making a massive risk. Toyota is betting on hydrogen. Toyota is betting on hydrogen, right, in the car market. And, my friends in Volkswagen tell me that they're completely nuts, that this will never work, right? Volkswagen is going 100% electric. So corporate Japan does take huge risks, right?
But not a huge corporation takes risks,
Yes.
but they don't consider preventive and contingencies with the risk.
It gets into the details.
Sorry,
Yes.
if you want to continue
Yeah.
if you want to continue the conversation, you have to go to the microphone. Sorry, because we're recording it. If you want to, a brief follow-up question, please, because we do need to move on to. So.
Hello again. On the subject of the risk, he says that Japanese companies take a lot of risks, and that's true. But my argument is, by taking risks, one should consider contingency. If something goes wrong, then you got to be prepared for it. And that kind of mentality did exist in Japanese mind, but not in the late, say, 100 years. Seniority. If the top guy said, this is a good idea, let's do it, then who ought to ask, what could go wrong with that idea? And that question is very important because that suggests that you got to prepare for preventive or contingency. And that action or measures are almost non-existent in Japan. And that has a lot to do with operational efficiency.
Yeah.
Thank you very much.
Thank you. Right, Rick, Kurt, does it go ahead? I can't, no.
Okay. My name is Kurt Sieber. After 60 years in Japan, I almost agree with everything which has been said today, except one thing. We are talking about Japan as a whole, whereas actually we only talk about 30% of what is happening in Japan. And the difference between these two levels is just the gap is getting bigger and bigger. You mentioned, or somebody mentioned about, yes, we should double the income. I have 3 daughters and 7 grandchildren now they all looked at that problem, and they're all in the United States. The only one who is well, still true to Japan is my son, and he is also thinking about going to Austin in Texas. So Japan has done an extremely good business for the corporations, but the money coming into the corporation is not going enough back into Japan. And the money is going abroad, and I think ultimately we'll have a situation that the big Japanese corporations will change their headquarters to outside Japan. Actually, that's already has been happening. So what do we really have to do to make Japan strong again? This is my greatest personal problem.
Thank you. All right.
Thank you.
Rick,
Your comments are very much
thank you.
welcome.
Rick, do you want to make an intervention there quickly, since you are? Hello?
Yeah.
Right.
An intervention. One thing that hasn't come up in permanent employment and so forth, and Jesper brought this up. Different Japanese companies behave very differently, and they compete fiercely with each other. What Hitachi is doing is amazing, and you couldn't have thought of it 10 years ago. Hitachi is aggressively divesting itself of its subsidiaries. It's an amazing phenomenon. I was on the board of one Hitachi subsidiary, Hitachi Chemicals, and we happened to sell that to Showa Denko. That wouldn't have been my choice, but anyway, it went to Showa Denko. But I'm also at Japan Industrial Partners. We bought Hitachi Kokusai. These are huge companies that Hitachi is divesting, not like Toshiba, where they have to divest it because they need the cash in the balance sheet. They're divesting it because the companies have value. It's just that they're not core to Hitachi. Hitachi is divesting those companies and then going into, it has a totally different strategy. And that's an amazing phenomenon. And, I hope that is also one of the models for the future.
Okay. Can I ask a question?
There are some questions online, Anthony. I'm sorry. There are some questions online. I'm not sure if you're seeing those.
Okay. Richard Dasher, question?
No, I just wanted to ask Rick, if Hitachi's divesting, which is an open innovation strategy, what are they doing with the funds? Are they using it to repurpose the kind of core strategy of the company, or what?
They're repurposing the funds. So Hitachi is making actually they're making a big bet on heavy power, which is but they're not going after Westinghouse. They're not going after nuclear.
Okay.
They're making a big bet on rolling stock, and the headquarters of rolling stock for them is actually in London. So they're divesting these companies, and they're also finding good homes for the divested companies. They're finding that the employees are ending up probably in a better situation.
Okay, thank you. Do you want to quickly say?
I think Dyck's point is absolutely this deconglomerization and the focus on core competence and redeploying capital. Certainly Hitachi is one of the big leaders, and when Hitachi moves, everybody else comes with it.
Right.
A very simple answer. What should be done? It is, in my opinion, a crime that corporate Japan does one thing and one thing only: hoarding cash. When you look at what happens, profitability in Japan has basically quadrupled, since Prime Minister Abe's days. They've kept basically the payout ratios in terms of what goes to capital in the form of dividends or stock buybacks has basically been flatlined. You find that the investments have basically been flatlined. What has not been flatlined, what has grown leaps and bounds, is retained earnings and cash and liquid securities on the balance sheet. That's now 140% of GDP. In the US, the comparable number is about 45%. And that is a crime because when you think about it, right? We are all talking about ESG, as in environment, social, and governance, right? That's the big mantra. How can it be that when you make money, you as the board of a company prefer to hoard cash, i.e. invest in a zero earning asset because interest rates are zero, rather than paying your stakeholders? This is the big crime, and if you want to make Japan a better place, right, it's very simple. Start paying your people. And when that happens, I'm always reminded of the great Henry Ford. Remember, very controversially, he doubled the salaries of his factory workers when he was doing the Model T. And, some capitalists went, why the hell are you doing that? And he said, if I don't pay them, they can't afford to buy my car.
Good point. Talking of ESG, I believe Tanahashi-san, you had a question, if you relating to that, if you could.
Thank you very much. To talk about ESG.
Could you identify yourself and your company, please?
Okay. My name is Shunsuke Tanahashi. I'm working for Partners Group, which is a Swiss private equity company, and promoting ESG pretty much. And my question to the speaker, who had a tremendously great presentation today. Thank you very much. Is that what's the meaning of the ESG for the startup company and entrepreneur? Because I briefly discussed with the chairman of Venture Capital Association 5 years ago, whose name is Mr. Kariazono. He mentioned that it's costly to deal with ESG at that time, but I think the situation is changing. Could you tell about the meaning of ESG for the startup?
Okay, so what are the implications for startups of ESG? Richard, you first, please, if you have any observations.
So if you look at the demands from the market, people want to see more attention to ESG. And this is having a very positive influence on how companies structure what they do, both large companies and small companies. Of course, it's a cost. If you look at ESG, you're really talking about multiple factors, some of which are covered by regulations, some of which are, just require a lot of reporting, and that does cost a company money. To offset that, I have to say the theory by Michael Porter is a pretty good one here. He has gone beyond ESG to look at what he calls creating shared value, CSV, where part of the core value that the company provides to the market is in something that definitely improves the environment or definitely improves the situation for society inclusiveness. So I think a lot of it has to do with how you conceive what you're up to. It doesn't really change the kind of fundamentals of how the system works.
Okay. Rick, any comment or not on that? You don't have to if you don't want to.
No, I think I'll pass on that. But one thing, what Jesper mentioned about the bet that Toyota is making in hydrogen, it's not only Toyota, it's now all over Japan, hydrogen. I was at a study group in Fukuoka, and they're looking at building their port facilities so that they can bring back what they call green hydrogen, which could be in the form of ammonia from Australia. I mean, there's a lot of activity going, and that is environmentally much more friendly than EV all over the world.
Okay.
So if real briefly, the government did kind of bless hydrogen some years ago, and it has been the source of a national project way back in the development of fuel cell days. But I'm really impressed with Toyota's example too, not only how much they're investing, but in how they're doing it. They're cooperating they have an active corporate venture capital group that's investing in these kinds of technologies. And they're actively partnering with startup companies in these areas. So they are using this more kind of integrated approach to look at something where we really don't see exactly a clear path forward. We all think it's important in the future, but how do you get there?
Okay, all right. We're running close to time, sir, and I did see a question flash up on the screen briefly. I think it's from John Boyd, one of our members, who's, I think, asking whether many large Japanese companies promote innovation publicly, but is this just PR? Is it just public relations? Quickly on that, Jesper first.
Everything is PR.
Well, yes.
Unless you make
more so PR.
No, particularly if your name is Elon Musk. No, I mean, it's very. I think that it's probably the other way around. The Japanese companies and Japanese university professors are too shy in terms of publicizing and grand staging, their achievements and their overall research. I mean, obviously, you'd want to be company specific, in terms of, but I think overall, I think Dr. Dasher made the point at the beginning, the Japanese are very humble, and are not very good, particularly on the global stage, to sell, their overall achievements. I think that, sorry, if I can do one other anecdote, being too shy or not being too shy, but I mean, we're kind of in this absurd stage, right, where Japan, runs the world's largest technology venture capital fund. I mean, it's SoftBank's Vision Fund, right? By far the largest pool of capital. As you are fully aware, they haven't made a single investment in Japan. And, I once had the opportunity to ask Mr. Son, well, why is this? He said, well, every year I try, but I walk out of the presentation meeting after 90 seconds because the people are not ambitious enough. They don't want to conquer the world. They want to be the king of Shibuya, right? Rather than what happens in Silicon Valley, what happens in Israel, what happens even in Finland, right? When you talk to a startup company, they immediately want to set the global standard and change the world, while the Japanese are much more humble and just want to change Shibuya.
Okay. So from the other two panelists, very, very quickly, is it all PR or is Japan really making strides in innovation? Just briefly, please. Richard first. No comment.
Okay. It can do more. There's a lot of PR. Watch for where the meat is. Is it really doing things with the AI?
Okay. And Rick, no, yes?
Yeah, actually, in reading John Boyd's question on the chat line, he's asking about AI, not innovation in general. And I was a little bit about Richard Dasher's comment on AI. For example, Jesper Koll mentioned Komatsu. Komatsu, construction might be a boring industry. However, Komatsu networks all of its mining equipment. And it in real time, it knows the reliability, all of the problems, issues with its mining equipment. Is that AI? It seems like AI to me. And also up here in Yamanaka, which used to be in the middle of nowhere, which was an appeal, it's now the headquarters of FANUC. So I just go out my door and down the street and I'm in the middle of FANUC. Is what FANUC is doing AI? I mean, I don't know how the statistics are that puts Japan low in AI. Japan seems like it's doing a lot in AI.
Okay, sorry if I misinterpreted the question. One thing I would like just very quickly to ask the panelists, because there have been mentions of Silicon Valley and the merits or otherwise of does Japan need a Silicon Valley? In the financial sphere, there's something called FinCity Tokyo, which the Japanese central government and the Tokyo government have set up to try to create a center of excellence in Tokyo, bringing in foreign fund managers, foreign financial specialists to raise the overall level of awareness on the financial sector. Does Japan need something similar to create a kind of Silicon Valley type of culture in Japan, and could it work? Briefly, Jesper first.
I think Japan has a Silicon Valley culture. I mean, just go down to Fukuoka. I mean, that's that's, I mean, I think, these government initiatives are all nice and well. It's part of the core, but I mean, the dynamics that you actually have, in terms of the startup community here, Japan does not have a thriving fund business. That's, for tax reasons, that's for regulatory reason, and also because the Japanese don't like to pay fees on fees. So that's, Japan does not have a thriving financial services industry, in the way that the United States or Singapore has, because for the United States and for Singapore, finance is an absolute core and must-have industry, while for Japan, finance is always viewed as a utility rather than as an industry on its own.
Good point. Rick or Richard, any brief comment on that?
One very brief point, and this goes to Richard Dasher's original presentation. I'm heavily involved with NEC and what NEC is doing on and also involved with a company called Glory, which makes automated machines that are used for payments and so forth. And one of the things that I hear in all of those companies that Japan is a cash society partly because of the high inheritance taxes.
Sure. Of course, you're completely right. You're completely right. Yes.
It's better to keep your cash in your dresser drawer. You get nothing in the bank if you put it in the bank, in your dresser drawer, and you pay cash. And you don't use debit cards, you use credit cards, and then you pay your credit card bill in cash. And it might seem like a detail, but I think actually it makes a big difference.
Okay, thank you. Closing comment, Richard Dasher, please.
Yeah,
if you
just
have.
to Rick's point, I think that really has an impact on successful entrepreneurs. They keep the money in the company and they keep a lot of company stock. And basically, it's the old thing where, the company buys the car, the company buys the things that you use, the golf club membership or whatever. Japan is a very innovative group of people. It always has been. I think that the system can use some tweaking and needs to be more receptive to change. But I'm very positive about Japan moving forward because you've got good people who work hard. And if they have the right kind of conditions and opportunities, they can do great things.
Okay. Sorry, I think we're up against time. Sorry, we have overrun. All right, well, positive closing comment, thank you. Obviously, there's a great deal more to be said, and I think we might well have a second session on this very subject. But in the meantime, thank you very much indeed, Dr. Dasher. Thank you very much, Rick Dyck. Thank you, Jesper. Incidentally, we do give our panelists 1 year honorary memberships to the club, so those will be sent to you, Dr. Dasher, and also Rick. I'm not sure whether you already have one, but if not, you'll be getting your 1 year honorary membership, and Jesper, you have one already, I know. So, thank you very much indeed for your help and your expertise. Thank you.
Thank you.